Yo, 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 let's trade some Forex. We can do yen pairs and dollar pairs and Swissy pairs and how about some gold? Some oil? Answer your questions. Talk about Jackson Hole. Talk about the ECB. Do whatever you want. You're the boss. I'm the humble servant. Let's go. Monster, RJ, Mr. Nabisco. Hey, good morning, everybody. I feel naked without glasses now, right? So weird. I'm not getting old. You're getting old. I'm not getting old. What are you talking about? So g'day, mate. Hey, Paulie. Umet, yo, yo, yo. Hey, when was the last time you said to somebody, so what do you stink? Smell like a plant? They're like, what the hell are you talking about? Anyways, my buddy Wayne. Anyways, good morning, everybody. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Thank you very much for being you. Thank you for contributing to the community and stuff. If you're new to currency trading, or you're new to our channel, or you're new to everything that we do, it's all brought to you by Traders Way. So make sure if you feel like this is a positive influence on your life, pay it back, huh? Visit tradersway.com, open up a demo account, start there, check out the execution speed, the awesome spreads. Unless you want an ECN account, you can have that. The swap is redonkulous, way better than your other stupid broker. So anyways, check it out. And once you download MT4, the link to download my chart templates to install into your MT4 account are available for free. Thank you to Traders Way. So namaste to them. So make sure you pay it back, huh? Also, thank you for subscribing to YouTube. It's a way for me to stay connected with you. When I click stream, you're supposed to be notified if you're a subscriber. If you're a subscriber and you subscribed and you clicked on the little alarm bell and you've checked it 9 times and you're still not getting notifications, another way to get notifications is go to twitter.com/FXBootcamp. And when I hit stream, a tweet goes out. So you can do that. RJ said that to his wife yesterday, and she kissed you on the lips. Yeah. You're like, ooh, baby. Anyway, so that's cool. So yeah, download my chart templates for free. That's good. What else? Hey, I guess we'll just dive in, huh? Oh, hey, look at that. I know, right? Cool, huh? New wallpaper, but I gotta get charts. The world is at your oyster. Okay. Come on, mother. It's hard to find wallpaper that big. Anyways, yeah, we've got all kinds of things going on, so it's going to be a good day. Good day, wonderful day. Oh, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, because on the long term, never risk. Money cannot afford to lose. And by the way, if you were a member 12 years ago, 13 years ago, this is what I used to say every day. Welcome to today's webinar. Let me remind you that the purpose of this webinar is education. This is not an alert service. I'm not here to make trade recommendations, but I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Is that amazing? Is that amazing? You probably remember it. You're like, that's exactly what he used to say. That's what happens when you say it every single day for, until your children are teenagers. All right. Whew. Nice. Tomorrow is our first swing trading group. Someone asked about swing trading. Yeah, that starts tomorrow. I sent out an email to a whole bunch of people. So you should be on the clue train about that. If you have a problem, Wayne at fxbootcamp.com. I discounted it by like $600. So anyways, plus the training. So here's the other thing. So someone just said they did the swing trading course and they thought it was awesome. And I just watched part of it the other day. I was messing around with settings and the video came up. I'm like, oh my God, the sound sucks. Honestly, I did it a year ago, right? So or 2 years ago. I don't remember when I did it, but I was really disappointed. So I thought, you know what? I want to get this new crew together. So it won't be tomorrow, but very, very soon. We'll get the crew together and I'll redo the swing trading course together as a group and get better sound and plop down the new and improved, revised, updated for 2019 swing trading course. So, yeah. Well, I apologize, Mikey. So we'll fix that. Fix it. That's easy. So anyways, let's move on. .com. How about that ECB? Travis like, yeah, no worries, Greg. Well, we'll redo it, man. That's all. Let's do better. That's the one thing about currency trading is you always are striving for better. Where's my drawing tool? Where? Gee whiz. What video? I don't know what you're talking about. All right, back over there. Mbuso, what are you talking about? Please be specific. All right. By the way, I'm not being nitpicky. I'm like that all the time. I always want people. I don't know what you're talking about, so I need to clarify before I answer. So we talked about this. Was it yesterday? I think it was yesterday. Yeah, it must have been, since this is a 15-minute chart. Remember how we talked about how I trap things in basically sideways ranges? When I use regression channels, I'm not really saying, look, this is the top, this is the bottom. All it is calculating an average, which we call the mean, okay? And then it just busts out 2 standard deviations above and below. Just like a Bollinger Band doesn't really tell you anything except where the 2 standard deviations are. And another way to describe what is 2 standard deviations is it's 95% of the price action. I think it goes 68% is 1 standard deviation, 95 is 2 standard deviations, like 3 standard deviations I think is 97, which doesn't give you much more detail, right? So anyways, so I only use regression channels to make it very easy to remind yourself of the trend. So like if I used a regression channel, and I'm drawing right now, so I won't do it. I'm only doing it to say, look, it's up, bro. That's all I'm saying, not necessarily support and resistance, right? Now, when I'm doing SNR, I tend to make like a floor and a ceiling, okay? And then my logic is you stay sort of between the two until you move up right, or down. And I often refer it to as stairs. As you go up, you consolidate, you go up, you consolidate, you go up, you consolidate, you go up, you can consolidate. And it makes it easier because then you don't have to figure other things out. So that's how I think about it. And this is what we did actually yesterday. And we were in the middle of the range, and I said, well, that doesn't really help me, right? It doesn't really help me to be in the middle. You need to be at support or resistance. So this is a good place to buy. This is a good place to sell. This sucks. Now you might say, well, Wayne, look, it did go up. Yeah, well, some people sold it, and it sucked for them. And next time you'll be on the wrong side of that, right? So when you're in the middle of the range, remind yourself, when you're in the middle of the range, it's not what you're supposed to be doing. You need to have like a daily mantra. I buy low, I sell high, I stay out of the range, so to speak, okay? And then how do I teach you beyond that? Breakout, pullback, roll reversal, standard price action, and now we're up here, right? So you should be long here, you should be long here, you probably, actually you probably wouldn't be long there. There's no real good entry except, well, the roll reversal. This makes sense. You might have been looking for a different kind of swing pivot, but there and there, this you probably didn't do, but this we set up if you remember. So you see what I mean? So I'm trying to get you to, you could not expect this, but we set this up based on the pullback roll reversal. And then what? A higher high, roll reversal. Then what? Higher high, roll reversal. Easy peasy lemon squeezy. What do you stink? Smell like a plan? Is that right, Chuck Duck? Did you, from YouTube, you mean? What's up, crypto? By the way, you know what's interesting about that? I add like the custom thumbnail for YouTube where it shows me like, right, like this or whatever, the shot of the day, so it's not just something like what we're looking at now. And then I pull up on my phone, and I see I got an email around 7:30 or around 8 when we started. But I'm not reading it till 11. But I added the thumbnail around 9:30 or 10, let's say 10 in the morning, right? So then an hour later, I'm checking my email. I'm like, oh, there's the YouTube notification. I click on it, and I received it around 7:30, but I added the thumbnail on the recording at 10. I'm reading it at 11, and it has the thumbnail, right? So it's really cool where it pulls the thumbnail hours later, which is, I mean, it really shouldn't be that complicated, but when you're serving 100 billion people, little things are complicated, right? Oh, is that right, Chuck Duck? Umit, we haven't started anything. I have a higher priority right now. So in my community, everyone drives golf carts. You drive golf carts to restaurants. You drive golf carts to the grocery store. You drive golf carts to rock concerts. You drive golf carts to your high school. So anyways, my son's like, hey, man. Hey, Mom. Can we go for a golf cart ride? Let me drive. I want to drive. They're like, yeah, it'll be fun. So my wife, my daughter, my son go out. They come back, and like my wife is crying and screaming, and my son runs up to the stairs and slams the door. And I'm like, oh, never again. Like, oh my God. So apparently I'm going to spend some time teaching my son how to drive a golf cart safely. We'll get to the Forex stuff later. So anyways. Yeah, that's right, Travis. I emailed everybody twice now, so you should be on the clue trade. If not, just go to swing.fxbootcamp.com. I guess I'll just get that out of the way. HTTPS swing.fxbootcamp.com. Pretty easy, right? No, Andrew, it's going to be noon for now, but we'll figure all that out depending on the schedule. I might actually start moving them to Thursdays to give us even extra time to plan. I mean, people just are blown away, right? Like we're going to start planning Monday's trades on Thursday, but yeah. All right, kitty cat, what do we need here? Well, we need good macro. Or at least less bad macro, right? Like for example, if the United States and China come to a trade agreement, this thing drops. Now why? Because it's good macro. And then you say, well, what does good macro mean? Well, it's good for trade. Trade requires business. Business requires production. Production requires energy. And the energy requires, right now anyways, fossil fuels. So that increases demand for oil, or let's say energy products. That pushes up the value of oil. Canada is a major exporter of not just oil, but all commodities. So all commodities actually will increase in demand. So that benefits Canada a lot because they're in the business of selling commodities. So commodity prices go up. Hey, benefits Canada, right? A barrel of oil or a tree or a nugget of gold, or, hey, it all costs the same when you dig it out of the ground. So if someone wants to pay more for it today than they did yesterday, hey, it benefits you. So anyway, so then demand for the Canadian dollar goes up and this goes down. Also, an increase of trade between the United States and China. So suddenly all the tariffs are removed from Chinese products and Americans start buying Chinese products again. They end up flooding the world with their U.S. dollars because they're giving money to the right and receiving a product or a service. So they give up the money, which means the money goes into the interbanking system or the global market, and there's more dollars, and the more supply there is, the less value it gets, and all this kind of stuff. So this goes down, good macro. You see the regression? You see how I don't really care? It's not really telling me support or resistance because I think this is the channel, right? This is the channel, right? Not this linear regression stuff way over here and way over here. Those are just two standard deviations. It's not really showing you support or resistance. I like to just remind myself of where the trend's been going. But the money here, the money shot, if you will, is the fact that we hit the monthly R2, stopped. Then we hit the monthly R2 again, then stopped. Hit it a third time, hit it a fourth time, hit it a fifth time, and stopped. And now, LH, OMG, WTF, BRO, right? So, could be the next thing, right? What's up, Joey? Oh, yeah, everything's recorded, AJ. Yeah, no. Everything's recorded. Okay. Okay, Mr. B says, hey, what do you think is going to happen with gold and probably everything else after Jackson Hole? I'm still waiting for a screw up out of the Fed. And I think what we're learning already is that the Fed presidents don't agree. And very often that's enough when it comes to central banking and committees and all this stuff, right? Where the votes are, let's say, unanimous, or maybe there's one dissenter. But then you start reading the meeting minutes, which I know you do, and you start listening to the speeches, which I know you do, and you start watching all the interviews that the Fed presidents or whatever committee members of whatever central bank are doing in the media, like CNBC and Bloomberg, and you find out, wait, these guys don't agree. They don't see eye to eye. They're it, right? You know what I mean? So all of a sudden you're like, wait. So it's that kind of thing. And then for Jerome Powell to, get pretty. Remember how I told you that everyone on the Fed, they're a bunch of nerds except for Powell, which he's more of like a jock, a country club pretty boy. And he's going to come out and, do the market right. He's going to try to play the market because he has the spotlight, right? And that's very, 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 very dangerous. I'll give you an example. The last time we had a Fed chairperson that was not an institutional academic economist with like PhDs behind them. The last time we had a Fed chair like that was with Jimmy Carter. He lost his re-election, and the economy went from crap to worse than crap. From crap to pathetic near collapse. So then he lost his election, his re-election, right? And who gets in there? Ronald Reagan. Now, Ronald Reagan was not a popular president in his first term. It's only been since after he was president that he became this like God in the eyes of a lot of Republicans. But at the time, he wasn't that popular. So how did he become ridiculously sickening popular? Reaganomics? Morning in America stuff? No, that wasn't actually that successful. You know what it was? Is Paul Volcker came in and destroyed inflation and made everybody filthy, stinking rich. And suddenly you had the 80s where Wall Street was booming and it was the me generation and everyone's buying stuff and cocaine at every party. And, people were like rich all of a sudden. We went from really poor where you needed, your mortgage was 18%. And 3 years later, stock market's booming, interest rates are low, money was free. Imagine money costing you 18% for your mortgage. I'm not talking about credit cards, but you know what? There were no credit cards because you can't have 40% interest rates on a credit card. So suddenly, Paul Volcker comes in and a house is now cheap. And then credit was available, and then credit cards started happening, and the stock market is rallying, and housing prices are rallying, and everyone's got jobs. Oh my God, we're so rich! Yeah! Thank you, President Reagan! And Paul Volcker's like, what the? Yeah. That's true, though. Think about it. It wasn't Reagan and Reaganomics. It was Paul Volcker made everybody filthy, stinking rich. But we had to have a guy at the Fed that says, you know what? I am going to crush the U.S. economy. I am going to purposely create a horrible recession, and I'm going to bring the mother down and build this economy back up and do it in less than 2 years. And he didn't listen to the President of the United States. Reagan wasn't like, hey, Paul Volcker, I want you to destroy the U.S. economy. Right? Like, do you honestly believe Ronald Reagan, the President of the United States, said, hey, Paul Volcker, I want you to destroy the economy now that I'm President of the United States? There's no way. Paul Volcker said, all right, you made me Fed chair. I'm going to fix this, and I don't give two hoots about you or anybody else. This is what needs to get done. Okay? The guy before was completely useless. And the guy before Volcker, the completely useless Fed chair, I think has more ties to Jerome Powell as far as similarities than not. Chairman Powell is not a triple PhD economics nerd, right? So, anyways, what I was saying is he might come out and play the market. Right? Play the market. He might want to have one of those moments where that the ECB had, right? Draghi came and said, I'll do whatever it takes. And that's famous now, and everyone will remember that. For 30 years, they'll teach it in schools. I'll do whatever it takes to protect the euro or to support the euro. Boom. So Jerome Powell's going to come out and say something stupid. And I think that's the big event risk of this week. And remember, 10 years ago, nobody gave two hoots about Jackson Hole. Nobody cared. This Jackson Hole, by the way, is a meeting for central bankers to talk about interesting central banking crap. It's not a policy meeting, all that kind of stuff. But Bernanke announced Twist, and suddenly at Jackson Hole, and then suddenly now it's a new thing, and Bloomberg wants to talk about it, and CNBC wants to talk about it, and it's nothing really. It really isn't anything, right? Sandil says the market is very choppy this week. Well, it's because we're in a transition. So you should know the third week of August is a transitionary period. We're going from thin summer markets to market participants coming back. And guess what? They don't all have the same plan, right? They don't have the same risk exposure and all that kind of stuff. So this is a transition week, and you should be prepared for that. That's why you have to have trade plans and then use technical analysis to confirm or deny that the timing of your plan is correct. And then, of course, your actual plan might not be correct. So there's a couple of things that we need to do, but your fundamental bias should still be there. So anyway, so we're looking at this, right? And dollar's been strong for a while. CAD's been weak for a while. It still is, technically speaking. But if we were to do not a linear regression here, but let's insert this one. Let's do this one. I can't see. Guess we should change the color. Okay. So that's the channel. This is the regression. Neat, right? So here's the news. What happens now in a transitionary period if this happens next week? That'd be interesting, right? Not hit the R2 for a fourth or fifth time, right? So here's a top, here's a top, here's a top. What if we don't hit the top again? Instead, we're playing this area, this top becomes that top, and then lower low. Obviously, this low lower than this bottom, right? So you see what I mean? It goes from a breakout to a breakdown. Turn that mother out. Boom, 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 right? I had to break down right there. See what I mean? So that's how we should be using that. And all of that would mean it seems that there's a positive macro change in the global economy. And therefore, oil should go up. So where's that silver? I want to kill the silver trade. XA. We had silver up yesterday, remember? XA. Oh, that is silver. XAG. Ooh, dangerous. Nice little swing trade, though. Boop, boop, boop. It's a day trade. Not perfect, but all right. I got to change this because I don't want silver. Silver, not gas. Don't want that. Must be this one. WTI. Wait, we wanted gold. Hang on. Guess I'll have to open this and actually look at it. Brent. Nat gas. XA silver. Where's my gold? I ordered a new monitor, by the way, because I can't read any of this anymore. XAG. Wish there was a search for it. Where is it? Oh, there it is. I can't even see it. For some reason, that's not highlighted anymore. All right. There we go. All I know is where you be. There we go. So anyways, there's a little day trade. Very nice. Chuck Duck says, that's my trade plan exactly. Right on, man. So let's go off of here. So That's my. Let's get off day trading. Let's put some legit analysis here. Oops, wrong one. Yeah, someone stole my gold. So what do we know? That's the most important thing. What do we know? It's not what you know, it's what you can prove. Okay, what can we prove? This is the projected bottom for the month of August. We know that. Factual. Projected bottom. So as we approach that on XAU, on GOLD, that you should become less and less aggressive. The caveat here, what kind are those? Samsung 43s, 4Ks each. Now the one I just ordered, pretty cool. It's a QLED, which is, they like to say QLED is the same as OLED, but not. But anyways, it's very, 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 very high quality screen. The blacks are super black. The colors are super clear. But it's about an ultra wide. Okay. And it's 49 inches. And it's for my desk here. 49 inches. Give you an example, or to compare that, let's say. Okay, these screens are 43 inches tall. So I bought one that's 49 inches, but wide. But it's only this tall, right? So that's going to be just for me to do my webinars and stuff, because I'm finding that I'm doing this a lot. And I realize I got these awesome screens behind me, but I'm basically doing, well, not basically, I am doing these webinars on a laptop and a shitty little external monitor to do chat, but I'm always looking over here instead of here because I'm reading the chat. So I'm like, you know what? Why am I doing this, right? Like, I got to get legit. So anyway, so I bought this like crazy, ridiculous monitor. Like literally, it's this wide, right? Oh, wait, over here. It's literally this wide. So, and super, super, super like sharp. So anyways, I'm looking forward to that. It's on its way. You make the setup for the monitors? You mean the computer? No, I buy it. So anyways, those are 43 Samsung 4Ks, and then I got this 49-inch QLED ultra-wide Samsung, and it'll cover my entire desk, so it's, I don't know. And it's curved, yeah. Yeah, it's not curved, so it should be really nice for my eyes anyways, I hope anyways. I don't know, I'm just trying to get through life alive, So anyway, so we know this, so let's take a different look now. And they're like, wait. So I messed up, didn't I? I apologize. It's so strange for us to be this high. Right? This is so strange to be this high. But that's what happens in the summer, yo. And one of the reasons is July. See what happened in July? So how does that impact the pivots? It pulls the pivots in. Hey, who just recently took the swing trading video course? I think in advanced, the one on advanced swing trading. Do I talk about that where when to expect the compression of pivots and then how to play them after the compression? I think so, right? So in this case, you're playing the R3 S3 after a compression. Anyways, that's the thing, and this is R3, by the way. And if not, remind me, I'll put it in there. R3. Yeah, Ernest says I did do it. Okay, yeah, makes sense. It's more typical on like inside days if you're day trading. It's another, so like if you have one range like this, and then the next range is like this, and the third range is like this. What do you do on a day where the range is like this? It doesn't make a higher high, it doesn't make a lower low. Well, the pivots compress, but then you can expect at some point a bigger breakout. So you wouldn't use R2, you'd use R3. You wouldn't use S2, you'd use S3 because the new pivots are going to come in tight. Another way of looking at it, I don't know if you guys use Bollinger Bands or not, but Bollinger Bands, they do stuff like this when you get a big upward move, and then it consolidates, right? And the bands tighten like this, and they tighten like this. And the longer we call this a tunnel. The longer the tunnel, the bigger the breakout. So a tunnel like this would suddenly go wah, wah. And you'd get sort of this thing going wah. So it's very similar in that case where this consolidation or the lack of volatility, in this case it's a measure of volatility, the lack of volatility tightens the band, but then now it doesn't show you much of the deviation, right? So now you have to like look at the compression and then look beyond the compression. Anyways. Oh, cool. Brinsley, right on. Watson! I wore cufflinks for you guys today. I don't think you can see it if I go there. Let's see. Oh, it's backwards. So one says buy low, the other one says sell high. Yeah. When I spoke in South Africa, Ryan was sitting there watching me do my speech and stuff, and then all of a sudden his eyes go like this. And he took me out for a drink and a cigar after, and he's like, I totally noticed your cufflinks. I'm like, oh yeah, you like that? I had one euro symbol here, and I had $1 symbol on the other one, euro dollar. He's like, oh my God, those cufflinks. All right. Stop having fun! Sorry, guys. Sorry. This Wayne, he's a jerk. He always has to have fun. So WTI, you see the consolidation? So what did we start with? Was it Aussie dollars? Or we looked at one, and I showed you how we didn't want to trade in a scenario like this. At least not on this time frame, right? And so what we need is we need to get beyond this consolidation. So I imagine you're already here or here, so adding a third one just doesn't make much sense is all I'm saying, okay? Like, let's break this down. Which moving average is in control? Is it the 21 or is it the 55? Actually, I was talking to Ryan about that yesterday or 2 days ago. Probably 2 days ago. And he's going to make some phone calls and stuff. But yeah, I really want to go to South Africa in January during my January break from Harvard. And I want to go to Cape Town. I want to go to the beach. I'd like to go to the winery. And I want to hang out with currency traders. And I want to hang out with Ryan. I want to hang out with David Pegler. So David Pegler's from South Africa as well. I talked to him about a week ago for 2 hours on the phone. And I'm like, hey, man, you want to go to South Africa? He's South African, right? Like, I didn't say, hey, do you want to go to Paris? Do you want to go to Rome? Do you want to go to Hong Kong? Do you want to go to Singapore? I said, do you want to go to South Africa? And he's like, yeah, that sounds great. I'm like, awesome. Oh, of course, Henley. So I went through the old proposal. I went through it and looked at it and all the details and just like, oh, there's so much fantastic stuff. So we won't do that one, but we will. I still want to do that one. But yeah. So we'll need a lot of help and support pulling all that together very quickly. But I just figure it's one day, 3 speakers, maybe bring in Marina to do a few things. So who knows, right? Just get everybody involved and have a great day is really what it is. Yeah, I'll bring water. It's like Cuba. You don't bring money, you bring parts for 57 Chevys. All right, so anyways, so the 55 is in control, right? So the 55 predicts consolidation. It predicts really something more like this, right? And that's next week's trade. Now, we looked at, I don't know if it was gold or some other thing, but we were stuck at a top at a monthly, right? We don't have that kind of resistance, but it's affected by the other things that are consolidating too. So it's sitting around waiting for new news. Good global macro will push this up, which will push the USD CAD down. So maybe wait for a USD CAD break and then tiptoe on oil, right? So if you want good macro, you're thinking this next week. If you don't think we're going to get good macro, then you're thinking this next week. Okay? So it comes down to your bias, right? You notice either way, you're setting up next month's trades. Right? So if you're a bad news bear, you're going to see something like this. Up, down next month. But here's the thing. You have to be able to say straight face, you believe oil is going to drop to $47.50. Okay? Right? If you don't believe that, then you're not a bear. No other way of saying it. Okay? If you're a bull, you're thinking like, oops, I want to do that in a different color. Okay? And you're thinking 61.50. I'm rounding this off, guys, but you get the idea, right? So which one is it? You're like, well, that's really, right? Well, let's do this philosophically then. You have to decide, $50 is next or $60 is next. Okay, which one? And that's a bias. That's all I've ever asked you for from anything. Is it going up or is it going down? The great 333, ZAR is getting crushed. Lira is getting crushed. Okay, we don't have good macros right now. Okay. Jimbo says it could range. No. I mean, yes, it could, Jimbo, but hear me out on this, okay? I'm not speaking technically or even fundamentally. I want you to think of it this way. The assumption, and I know, assuming whatever, the assumption is traders have been away. Okay, for the summer, we lost market participants, right? So summer vol is low. Okay, we understand they literally go on vacation. So over the next 30 days, that will no longer be the case. Okay, fall vol will go up. Can we agree that that is likely and that we can understand that based on just human nature? People went away to vacation, so they were not trading oil. But now that they're back, they're going to trade oil. Okay? So therefore, it's not going to move sideways. I mean, you're right, it could, but I don't want you to think that way. See what I mean? So if summer vol picks up, it's going to do this, or it's going to do this, okay? That's all. We're simplifying, but that's called a bias, okay? Now you know what to look for and to plan. You know your opportunities and you know your threats. Because if you're a bull, the black arrows, right, that's a threat. So like, how do you play at bulls if you find oil prices down here? You should be like super nervous. Don't you stink? How do you play it if oil's here? Well, you probably walk away and wait for a triple bottom to form, but you ain't going to be the one forming it, right? So what we're thinking about, what I'm suggesting, guys, was we're not talking about today or yesterday, or we're not even really talking about tomorrow. Over the next 30 days, market participants will come back to the market and they will participate. That will create volatility and from the volume of trading. Some will be bulls, some will be bears, but a trend may form where like they come back and they're like, I'm not so afraid of the trade war, or I'm super afraid of the trade war, or Europeans are very upset, like that Germany is in recession, right? Like they're a huge manufacturing economy with massive exports, and that whole industry is going into recession. Okay? So you have to choose and then use technical analysis to confirm or deny whether your bias is correct. Okay? So in that case, based on this information, Jimbo, I wouldn't even think consolidation, because I don't think it would be helpful for you to get into a trade. I would, if I were me, I would expect a trade, a trend. I would expect a trend to form. So I don't want to think consolidation, because if you think consolidation, you'll talk yourself out of a good trade. Okay? See what I mean? So that's sort of the psychological trick of the day. Okay? Looks like we did this one. Yeah, this is the one we started on. See how it's climbing up the stairs? Look how easy that trade was. Look at that. Up, down, buy. Yeah, but it didn't happen until the London Open. Like, when do you think it would happen? Of course it happened at the London Open. Right? Look at this, just riding the 21 roll reversal. I even have it highlighted for you. Oh my gosh, huh, guys? Look at that. It's sick. I'm pretty sure yesterday I'm like, yeah, you don't buy it here, you buy it here. So now right? Now you got to go up, 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 and maybe get something like this. Ba, ba, la, la, la. Hoorah! Yeah, kiwi is a dog with fleas. Huh? Kiwis is a dog with fleas. Look at that. Well, what do you see here? So let's go back to price action. It's amazing that we were down here, and if you were patient, it's still provided. Yeah, I didn't give a discount. I just lowered the price, Julie. So if you want to save $600 this month or save $600 next month, it's up to you. Oh, you guys want to do pound? Okay, I can do pound, unethical. So I have to remind you, ethical, I spend a lot of my time looking at the charts, and I spend a small amount of time looking at the chat, because what I do is I find a question, I grab one, and then I talk about it. But often when I look at the chat's moving, so I only see 1, 2, 3, 4, 5, 6, 7 posts, but like every time I look, I probably miss 10. Okay. But anyway, so what I'm talking about here, guys, is price action prevails even on massive moves. I'm telling you, lots of amateur traders would sell here, sell here, sell here, sell here, sell here, sell here, and lose. And the basic price action is when you made a lower low. Okay. Now, often it doesn't go that far back, but you should still wait. You should still wait for the sign. Now, I think this move here is the sign, right? So let me zoom in so you can see it a little more. Like, when do you know, using technical analysis, that that it's time to enter the trade? Well, let's use a channel line that I did today. So you don't really see me do these very often, but let's do one anyways. Now let me kill the ray on this. Ray. Boom. All right. And weird. That's weird. So let me redo this. That's weird. All right, let me redo it. Insert channels, equidistant. It's weird. This is supposed to be. Well, let's try to get this. Anyways, a break. You see the break? Lower low, lower high. That's a pretty obvious way of doing it. Okay. Pound something now. Remember, guys, let me make a point here. If you're excited because the pound is moving now, you've missed out. If you don't have a trade plan from yesterday or the day before, you're just reacting to the market, right? So like, what's happening in right this second while I'm doing a webinar, it's irrelevant. Let me give you an example. If you were a swing trader, you'd be long here or here. So, and your target would be the exact top. So this would have happened if you were a bull. I don't know, 2 days ago, 3 days ago. So like what's happening now in the moment? Oh, Merkel said blah, blah. It doesn't matter, dude. But if you're reacting to this, you're not trading properly. Your reaction should be, oh, look, I hit my profit target. Or, man, my stop got hit. What nonsense happened? Then you do a little research like, oh, Merkel was flapping her gums and ruined my good trade. Okay. But your reaction to this would be, oh, so that's going to be support in the future. I like Wayne's channel lines. Maybe I'll draw a equidistant channel line, and we'll measure this out here, and we'll see if this produces a top, and we'll look at the roll reversal. Like that's what you should be doing. You understand? You should just you should be setting up tomorrow's trade. What's happening now is irrelevant. Now, yes, you can chase this and try to make some quick pips. You're doing yourself a disservice. You will never become a professional trader if you're reacting. So we got to kill that. That's from a scalp. Okay? So if you happen to be on this, hey, man, you got lucky, right on. Or if you were short and it busted through and knocked out your stop, which would have been just about here, you got unlucky, but there's no alpha. There's no alpha here. Do you understand? If you didn't analyze the market and put together a plan, you didn't add any value. There's no value add from you participating. You're just responding to stimuli, like a sea cucumber, right? Your trade plan was as complicated as one created by a sea cucumber. No offense if you love sea cucumbers, but they don't have huge brains, okay? But if you planned this out 2 days ago and you're long, and you're like, boom, you got lucky on that, I'm like, hey, man, that was awesome. Good for you, man. That was great. Oh, that Merkel thing, good job. You hit your target. But you notice, guys, that this is the target. Like you knew that 4 days ago if you were a bull. That's what the swing trading course is all about. That's what the swing trading group does. So I want to do that on like Thursdays, guys. But right now we're going to meet tomorrow. But imagine now it's a Thursday, right? You should be planning this out like down in here. Okay. And that's where I want to get you as a trader, guys. If you're a scalper and stuff, I'm not trying to belittle you, but I'm trying to say that I want you to analyze macroeconomics and make decisions. Then I want you to confirm or deny those decisions with solid technical analysis, scientific methodology to prove or deny the hypotheses. Do you understand? That's what I want for you. And if you do that, you will have a career and or a business. Picking up 20 pips because someone was flapping their gums, that's not cool, dude. That's not a skill, that's not a career, that's not a business. And it won't benefit you. And the worst thing that could happen to you guys, listen to me on this one. The worst thing that could happen to you on a move like this is that you make money. Now you'll have to lose 9 or 10 times more to realize that this is a fool's gold, fool's errand. Okay? Does that make sense? I want more for you. Okay. Thank you, Adam. I want more for you. Okay. I want you to have more foresight than that. Okay. And I know lots of people log into these webinars and they want me to throw them into a trade, and that I can do. It could be go, 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 rah, 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 let's go, go, go. I won't do that to you. I just won't. Look how obvious these setups are, just with technical analysis. Like, I want you to truly, truly, truly succeed. Let's look at some yens. Joey said what I thought it was. Yeah, I just lowered the price, Joey. I think 2 years ago it cost $1,400 to sign up. Then I think last year it was $1,000, and now it's $400. I just lowered the price. That's all. Like, just screw it. Everyone get involved. Just get on board. Let's go. And then I made you pay $1,000 to take the swing course. I'm just going to re-record the swinging trading course and put it in with that membership. So now there's another $1,000 savings there. So like, just sign up. There's no reason not to anymore. So I just, whatever. And if people don't sign up, they don't want to swing trade. I'm cool with that. Okay. Beast. Okay. So Beast is benefiting from this move. Okay. Let's do a swing trade. Oh, there you go. This is the target. Okay. Now notice it's a CPP. So we're talking R2. Okay. Now the interesting thing is, you should have had this planned on Thursday or Friday or Saturday or Sunday or Monday. And on Tuesday you got it. Boom. Plan A. Plan B was here. That's how you trade. Waiting for your account to be activated. What? What do you mean wait for it to be activated, right? Yeah, so, yeah, Mike, so I'm redoing it, Mike. Right? You got me, Mike? I'm going to redo it so it's awesome. The sound is really pathetic on the old version. So I put the old version in the current one, so if you sign up right now, you can take the swing trading course. But beware, the content's great, the sound sucks. Okay? So I'm going to, with our group of all new swing traders, we're all going to get together sometime in the near future, and I'm going to start re-recording them with you live, and then that's the new course. Doesn't give you access. Then, I don't know. I have to look at it. Okay. Central pivot point. Cool. So Beast, right? I don't want to talk counter trend because it's too late in the week to do a counter trend. So it's one of these things like, if you missed it, how do you play it? Well, use price action. Okay. And use swing trading. And here's the thing. If you play this right and you missed it, what the hell just happened now? Was it taking a screenshot or something? Weird. I didn't even know I could do that. So if you play this right, guys, and you missed this, so you missed this, you didn't have a trade plan, that's fine, right? And you missed this, well, that's all right. You didn't have a trade plan. That's cool. But now you're like, you know what? Now you say, based on what I've seen here and here, I'm a bull now. Let's say that's the conclusion you've made. All right? Then the next step is you've analyzed support and resistance. You've analyzed everything, and you've decided you're a bull. You can't buy it now. You're not going to buy it up here. So your new trade plan is this, guys. So it's Thursday right now, and you'll probably end up buying this Sunday or Monday. So that's what I mean by planning Monday's trade on a Thursday. I'm going to, so people in the swing trading group will have that much time to prepare for their trades. Okay? Just like this would have been a Thursday, and this would have been your plan A, and this would have been your plan B. So this is your whole area. And so you had Thursday, Friday, Monday, and then the trade happened on a Tuesday. Yeah, so you'll have that much time. Or you can just react to random news that occurred and hope you don't get slaughtered and sliced and die 1,000 lashes. Right? You can go for 9 pips. We'll go for 250. So here's 2 open swing trades now, and I'm just farting around. Nothing's happened all week. This has been a really boring week. Still not even up 100 pips, but all I did was buy. And so now I could actually move my stop here if I wanted to and lock in, where am I at, 50, and I could lock in 25 pips profit just for fun. And even though I'm up more like 75, and then, but I'm waiting for this. Okay. Cool. Now, where are my threats? So my opportunity was here. I could have easily added a second. Now, what's the next one? Well, I want this, right? What's the threat? Well, somebody disagrees with me. So where would that be? It's not terribly clear. It's sort of this range here. Okay. So my threat would be today and tomorrow. We hit the top of this range, and we drop back down, and next week we do this. And I'm out probably Tuesday at break even. And I only collected a week and a half of interest payments. Okay. Now you totally can. Okay, Jimbo, these are examples of how to enter trades. But yeah, so do you remember we were talking earlier about steps basically, or what I call them is trade stacks, right? So if you're going to do trade stacking, right, it's part of portfolio management that you would add another one here, right? And then once we're above this, then you come up and you add another one. And then you're above this, and you start trade stacking, or it's really position stacking. Okay. So there's the Aussie. The Aussie's not as clear, right? But we know the fundamentals on Aussie's really weak. So we're not surprised by this. But like I said, I'm not bullish on Aussie yen. Okay? It's a hypothesis. It's a hypothesis of what if macro turns good. Okay? And for all of that, because if macro is good, this goes up. That's the idea here. Okay? So for that to happen, a bottom must form and then a reversal, right? Is next, right? So I'm using technical analysis to say, did a bottom form? Well, you know, lower low, lower high, lower low. Ooh, 100% retracement. Ooh, double bottom. Oh, higher high. Oh my God. All right. Definitely a bottom. Don't you think? Definitely a top. Definitely now a bottom has formed. Does it mean reversal? No, it does not. Because it could do this. Down, up, 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 down. Right? Very easily do something like that. But maybe, just maybe it goes down, That is also possible. So I need to manage that risk and all that kind of stuff. So if I were to buy, how would I buy? Well, the first thing I want to see is a double bottom. Okay? Double bottom. Then the next thing I want to see is a higher high. Higher high. Right? Higher than this high. Then I want to buy a higher low, which I did. Higher low. So it's not like I just threw a trade down. I got the double bottom, I got the higher high, I got the higher low, I'm long right there, and I've removed the risk, so the stop is also there, right? So I bought a bottom. There's no reversal yet. I'm not bullish, the market's not bullish, the market's bearish, but you notice it's a lot less bearish than it used to be. This is aggressively bearish, this is conservatively bearish, and because the 55 is in control, what do we expect? We expect that. Well, that's what I did. So now the next thing, if it's going to reverse, then it needs to make a higher high. And if it happens, I make a lot of money. If it doesn't happen, I don't lose anything. In fact, I collected swap for a while. It would be nothing. It would be pennies, but I'm in the business of taking opportunities, right? I'm not in the business of perfection, but I'm also not in the business of gambling. I'm in the business of hardcore economic analysis backed up by scientific methodology. And I need opportunity. That's what I need, because if I can do that 100 times, even if 90% of them fail, which is redonkulous, but let's say 90% of them fail, but every time I got my stop at break even, then I've lost nothing, but I've had 100 opportunities to win. Well, what about the other 10% that actually worked? Models and bottles, baby. Okay. Did I catch the spike? These are 4-hour candles. There's no spike. Nice haircut. Really? I don't think so, dude. But anyways, thank you very much. Yeah, there's no spikes on the news. I did see it. I did see the spike. But I had to wait like a day and a half to enter the trade. I know, right? Dude, that's just, I'm telling you, that's how you do it. A lot of amateurs would have bought on the way down, or on the way up, actually, and it wouldn't have been that great. Now, of course, you could scalp inside of this candle and pick up some pips and stuff. But while you work hard to make 100 pips, I make 100 pips while I sleep. It's your choice. And not all days are that volatile. Now, some will say, well, when that's happening, you should jump into it and make quick pips and stuff, and then that helps all that. Yeah, okay, that's fine too, okay? But I'm trying to build a base of knowledge and a base of skill first. And then once you have other skills, then once you have the base of the skills, let's say, then you can throw in scalping, all that, which I love to scalp, by the way. I love it. It's fine. I don't want it to be the basis of what you do, because scalping's not a career. Scalping's fun. Scalping's a hobby. Scalping is exciting. It's not a career. And if that's all you do, what'll happen is you find out that it's hard work. And it's like being paid by the hour. And right? Paid by the hour, which means you're poor. Rich people, their money works for them. There's a big difference. So what I'm trying to teach you is to have your money work for you, right? So when I worked, I'll pick this CAD trade. When I worked on this trade, I really have to zoom in because it was so long ago. When I worked on this trade, I saw the spike. Okay, so then I waited. I created a trade plan. Then I waited. I got the pullback, got the pullback, got the pullback. Almost entered here, didn't quite get it. Almost, right? And eventually, you can say I still have a fib here, but eventually I bought it. That was a lot of work, but most of the work was waiting. Most of the work was acknowledging something very interesting happened. Cool. And I said, great, I want to buy somewhere around here. Using pivots, using price action, using a bunch of things. And then once I got down into this area, which took 2 days, so I really didn't do anything for 2 days, but it's work, I guess, right? If you consider not doing something work. So anyways, so once we get down into here, then you drop out of a 4 hour and you drop into like a 1 hour or a 15-minute, and you put together something like a double bottom, and then boom. Okay? And then you move, and my stop, by the way, was down here. And then the next day, I moved my stop to break even, and now I'm done. So, most of the work was not doing anything here, not doing anything here, paying attention here, then actually setting up the trade on like a 15-minute or a 5-minute or a 1 minute, and setting this part up of the bigger move and get long there, put my stop. So that took, let's say that took me a half an hour to an hour in here, like actually setting up to pull the trigger. And then the next day, I moved my stop from here to here. That took me 1 second. And now I haven't done anything. Nothing. I don't think about it. I don't look at it. I don't really care. If I wanted, I could move this up to this level and lock in plus 25. But, this is what I'm trying to do, so might as well do that. And I don't work. I get paid every day, some sort of swap. It's not very much, but I get paid. I earn interest. And because I'm leveraged, it might not be a lot, but let's say it's 150% a year. Oops. Right? So this is what you have to complain about. I'm a currency trader with interest rates so low, it's terrible, man. I only make 150% a year in interest payments. Yeah, it's really sad. You know what I mean? Really sad. I only make 150% a year in interest payments. So I didn't make, right? So I made like $2 here and 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 $2. A year goes by and you're like, dude, that's like $700. Okay. Of course, it's not $2. It's even less than $2 per mini lot, but right. So anyways, so if you're along, so you get the idea, right? So you're like, I'm only, again, this is mental. You might miss this information, by the way. You might miss this information if you're trading mini lots. But if you are trading millions of dollars, this matters. So why not incorporate that knowledge so if one day you're trading millions of dollars, how would you trade? Well, don't you want to train yourself for that now? Right? So, it's one of these things where I own an asset that will pay me like clockwork, like a bond, except I get paid every day. I collect faux show, right? Every day, 365th of 150%. You know what? Let's get an actual number. Let's stop messing around. Where's my CAD yen? Here's my CAD yen. Oh, not bad. 120% a year. Cool. So I own an asset that will guarantee me 120% a year. As long as I stay above this price. I cannot lose money on this trade. I cannot lose. It breaks down, Walter. It breaks down somewhere. Okay, it breaks down. But every single day you earn swap. That's what that is. So if I do nothing, right now, do nothing, and own this, I will earn 120% a year. However, I'm already up 75 pips, right? So I'm already up 75%. So like if this cost me $100 to get in the trade, one mini lot, I'm up $75 already. So I'm already up 75%. You see what I mean? So let's say tomorrow or the next day we're up here, I might be up 120 pips, so I'm up. My trade has got $120 profit, right, on a $100 investment. So I'm already up 120%. And you're like, well, do I need to stay long a year for this, or can I just cash out now and collect, or do both? Or so this is why, like with swing traders, I'm like, you should be embarrassed if you don't make 300 pips on this, right? That's what I'm trying to get to. Because now you're like, well, wait, that's 3,000% return on investment on my $100. Okay, cool. You're all right with that? So you might want to take your profit. Who cares about the carry now, right? Who cares? Right? So anyways, that's kind of where I'm getting you. I'll get you there. But do you want to teach yourself how to think big like that, right? Right? You want to think big like that? So how much more do I have to work on this today? None. And what about tomorrow? How much do I have to work on this? None. If you don't swing trade. If you don't swing trade, then every day you have to go to work, do your analysis, find support and resistance, wait for the retracement or the extension, then drop into a small time frame, then get ready, then watch every single candle in the 1 minute, and then you get the rollover, then you take the shot, then you pop a stop, and then you watch it. And you watch it for 2 hours or 3 hours, and then it goes up 25 pips, and then you take your profit, and you worked 4 hours, or let's say 2 hours. 2 hours. You worked 2 hours for 25 pips. I think your time is more valuable. Right? You have to ask yourself, are you a king or a street sweeper? Yeah, Jimbo. Okay. So now, if I get lucky, it goes like this. And I make another 100 pips, and I haven't put in a penny or a minute. I haven't put in another minute. So what's happening now, guys? I worked really hard here, and I used my brain. Most of this was waiting. And once it was set, and I removed my risk, now my money works for me. So by definition now, if money works for you, you're wealthy. If you're rich, you have a job that pays you a lot of money. So if you go in scalping and you make $2,000 today and $1,800 yesterday and $800 tomorrow, you work right, and you're putting in the 8 hours, and you're making 25 pips here and 25 pips there and 18 pips here and 5 pips there. You work really hard every single day. You're getting paid for your time. You understand? You're getting paid for your time. You're rich. But you don't want to be rich. You have to understand that. It's a form of poverty. Okay? You're a doctor or a plumber, an electrician, a masseuse, a wealth manager. Okay? I don't care if you make $500,000 a year, but you got to go to a job every day. And if you don't, you get fired and you don't get paid, and now you're poor. Then by definition, you are poor, right? So I want you to get to a point where you have money working for you, and you wake up in the morning. And by the way, lots of you guys already do this, and you've already been trained by me and stuff, but there's nothing better than waking up in the morning, opening your charts, and finding out you made 322 pips last night while you slept. Well, how do you do that? Well, you probably had like 7 trades open, and the market's moved in your favor, but you did your analysis, so that's probably going to happen. But anyways, it was a good night, and you wake up, and you're like, oh, look at that. You're like, oh, look at that. That used to be a good month, right? And it's just like, that's it. Yeah, my stop loss is there. So my stop loss is like minus 2 pips or something, minus 3 pips. I like to make sure it gets knocked out for a loss. The worst thing ever is to take a +1 loss. So it's like -3, -4. I don't care. Okay. I don't count that as loss, especially since my swap is already paid for that. So, okay. So now, who knows? If I get knocked out in a week, I had an opportunity, and I'm okay with that. And I'll look for another one, and I'll look for another one. I'll look for another one, another one, another one. Not just this pair, other pairs, and other pairs, and other pairs. Okay? And that's where you start building a portfolio based on your fundamental bias. Or it goes up, and I continue to make profit while I sleep. And I say, thank you, money. I love you, money. You're so wonderful and beautiful. I love you, money. But it's what money does. Spending money, oh, I don't like spending money. Because now I have to work. Right? If I take this out, now I have to work. I have to set up another trade. Like, that's work. I got to do analysis, and I got to wait for the move, and then I got to be patient. I got to wait for it to come back, and then I got to set it up, and I got to drop into a small time frame, and I got to wait for a cross or a rollover or the pattern, and I got to wait for all of this. Then I got to take the shot. Then what if I'm wrong? And then oh my God, this is work, dude. This is work. Walk away and let the money do the rest. Okay? In some months, you'll be very, 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 very right. In other months, nothing happens and it doesn't work out. Too bad, so sad. But we know your other scenario doesn't work. So be open-minded. Please hear me. Why is it? Oh, okay. Why is it a bad scenario? Okay. Let's say... Let's clear this. This is probably confusing sometimes. Oh, but I can't see the charts. Okay. All right. Let's... Oh, I know what I can do. Okay. All right. Let's say my winners are 50 pips. My losers are 50 pips. And my win ratio is 50-50. Some of you guys might know this. They might know this one. How much money do you make? Paul says he bought it on the 15th. That's pretty good. I was going to say that sounds early to me. I'm not looking at the chart. But then I'm thinking about it like, yeah, that's probably around when I bought it too. But anyways. So pure mathematics, of course, is quick on the draw. The average is 0. Okay. So the numbers are interesting because what if, let's change this now. What if you win 75% of the time and lose 25% of the time? Well, Peter, yeah, with commission and cost or something. Okay, so here's the thing. Like all of a sudden these numbers start moving around, right? So what I'm saying is at some point you're going to show your track record to an investor, and they're going to look at, the most important thing is the average win or average loss. Most amateur traders, they believe this is the most important thing, the winning percentage. And that's the dumbest, least important statistic there is. Nobody cares at all about that. The worst thing you could possibly do is have a high winning percentage. So what we need to do is show you know how to take a loss. You want to show that your winners are big and your losses are small. Isn't that what's most important? And then, of course, how much money you made, right? That's what they care about, right? They want to know how much money you made, but actually they don't care about that at all. I'm telling you, when you sit down with a sophisticated investor and you say, I made 22% last year, they're like, good, let's go through your trades. They don't really care because they're interested in risk-adjusted performance and stuff like that. And they want to look at worst-case scenarios, risk of ruin, because they're much more concerned about you losing money than of course you make money, that's your job. And most of the money you make is supposed to be a function of the market. If the markets are good, you're supposed to make a lot of money. If the markets are bad, you're not supposed to make a lot of money because they're risky and you're not supposed to be taking risk. So they look at the beta a lot and stuff like that. So you could produce a lot of money, but the markets were bad. And they're like, well, how the hell did you make all that money? Because we know the markets sucked. And then they look at it and it turns out you took risk and now it's all over. So it comes down to risk adjusted performance. So how much money you make is not very relevant to a professional investor. Okay. And the winning ratio, win to loss ratio, is one of the least important statistic. But if you show it and it's high, it's a red flag and you've pretty much killed your deal, but they're going to look at it and try to figure out why your win ratio is so high. But you've just educated your potential sophisticated investor that you don't know how to take a loss and that you have ego attached to a high winning percentage. And you cannot have ego. You just cannot. So let's do this. Let's say, how do I play around with this? Well, I guess I'll make a point. If half my winners, so 50% of my trades make 50 pips. What is my average win? Can you do the math on that one? Pure math? %50 of the time, it works every time. Come on, drum roll. Your average win is 50. 50 pips. If the other half, let's say 25% of your trades are break even, and 25% of your trades are minus 50. So you're still taking a 1-to-1 risk reward ratio, but now you're managing your risk. What is my average loss? Minus 25 pips. So now we get to a better statistic. Every time the trigger is pulled, on average, 25 pips are made. Half the time they make 50%. Half the time, on average, they lose 25 pips, right? So 50% of the time makes 50 pips. The other 50% of the time, on average, loses 25. So every trade made, on average, puts 25 pips into the account. But it's still 50-50. Now, most amateurs, they don't think this way. And they're really, really concerned about a high win ratio. So what do? Instead of taking a loss, what do? Oops. Okay, wrong way now. Wrong way. 50% of the time, they make 50 pips. Great. 25% of the time, they make 1 pip. And 25% of the time, they lose 50 pips. The only difference is 1 pip. You see the difference? 1 pip. So 50% of the time, they make 50 pips. 25% of the time, they make 1 pip. So now the average winner, rounded down just to make things simple, is now 25 pips. And the average loser is minus 50. You see the problem right away? So the average winner now is minus. You see that? You went from awesome statistics to very bad statistics because your ego was attached to a win ratio and you called a loser a winner. Hey, it was a loser. You made a pip. It's a loser. It's a loser. Call it a loser. Get over it. It's a loser. Your trade plan wasn't to make a pip. Your trade plan failed. Shoot, if your trade plan was to make 100 pips and you made 25, it's a loser. You put money in your pocket, it's a loser. You're screwing up your average win. If you were trying to make 100 pips, but you only made 25, you're screwing up. It's a loser. Now, it's going to get recorded as a winner, but now you're compressing your average win. But whatever, it's not a loser. You're making money and all that kind of stuff, but still, a trade plan is a trade plan. If you call one pip a winner, you are ridiculous. You are fooling yourself. Do you think you're going to fool an institutional or professional investor? Hell no. They're going to laugh in your face. And don't think that they're not going to laugh in your face. They will actually break out. They'll tell you you're an idiot. You're up there doing your PowerPoint presentation about how awesome you are as a trader. They're eating lunch, and they're not even looking at you, not even making eye contact. Oh, yeah, that's really good. So you do what? You probably had to pay for the lunch. Oh, that's really good. Yeah. And then they're like, okay, let's take a look at it. What's your average win? 25 pips. What's your average loser? 50. What? Your losers are twice as big as your winners? What are you, an idiot? Oh my God. We're not giving you any money, but thanks for the lunch, dude. And you're like, no, but, no, dude. It's over. It's gone. It's done. You're dead. It's over. Smell you later, dude. Thanks for the lunch. This is a great sandwich. Get the hell out. Gotta go. Gotta work with my real traders. And that's it. It's gone. Like, it's gone. I am not joking. And you're like, no. Let me explain how I use my, Dude, it's dead. It's just dead. Yeah, well, Raymond, so how do you put MAP? That's a very good question. MAP is designed to protect intraday traders from going broke. Okay? It's to get you through the first year or something. And it's also used in a way for you to have a vision for your trade plans before you take it. So like the question is like minimal acceptable performance, I identified in the book as 15 pips. And I said, it's not a goal, it's not a target. You're not trying to make 15 pips. Only a loser tries to make 15 pips, right? You're trying to make 45 or 50 pips on an intraday scalp, okay? But if you cannot, in your mind, guarantee yourself 15 pips, even if the trade falls apart, if you can't walk away with 15 pips, it was a crappy trade. Shouldn't have been taken in the first place. So that's what I'm trying to teach, right? And basically, it's a form of saying, look, move away from scalping, move into sort of session trading is what I call it. So you make a trade in the New York session, you pick up 25 pips. Sometimes maybe it's only 15. But if you're not like, if your trade plan isn't worth 50 pips, come on, dude, it's not worth the risk. So that's where that goes from. But if you know how to trade, though, right, Raymond, taking it to the next level, because remember, Raymond, I wrote that book, 13 years ago when there was hardly any education whatsoever about how to trade Forex, okay? So I wrote that for new people coming into the market. So the next layer is, like, would I take a swing trade if I only thought there was 50 pips in it? Well, first of all, that's not a swing trade, right? So, like, what am I doing now? I'm up 75 pips profit on this CAD yen, And my stop's still at break even. Why not lock in 15 pips? I don't want 15 pips. It's not my point. My point was I want this to survive. And I want this to grow. And my trade plan is that for this market to slowly turn from very bearish to neutral to bullish. And if I get that right, I get paid money, not 25 pips, right? 500 pips, 600 pips, big bank, and then probably one here and one here and one here and one here. I want to make 10,000 pips. I want to make 10,000 pips. I want 10,000 pips, not 15. But you know what? When this makes a higher high, lock in a day's, right? Lock in an average daily range. So let's say I'm trying to delete this. Let's say we get this sucker kind of up in here. Lock in an ADR, average daily range, or average true range. I'll put ADR. I like average daily range. So let's say CAD yen moves 75 pips a day. I say, well, I had to work a day for this. All right, so I'll lock in 75 pips. I don't want to do it now because I want to be up here. Okay? And like no matter what, worst case scenario, now I make a day's wage. And then you do another one. So James is like, so I want to make sure you guys understand what I mean about pips. Okay, I want here and here and here and here and here and here on CAD yen, but on Aussie yen, for example. And I'll probably do some, like, then you could also do Aussie Swissy, odd Swiss. Right? You could probably do CAD Swiss. Okay? And if macro does kick in, you might end up doing Aussie dollar, although your carry is going to be negative, right? And USD CAD, which I already pointed it out today that it might be doing that. And then what? And then you move on and on. So what I mean is, all right, let's say I get 10 trades. Dang it. Okay, let's say I get 10 trades. 10 trades. And I kill it. I crush it. This works out for me. The whole market turns. A trade deal is announced and whatever. Like it goes macro like my hypotheses. You understand? Like whatever it is. I get it right this time. It doesn't always work, and you're going to be wrong a lot, but what if this one turns out? The market actually went from bearish to neutral to bullish. Something changed in the fundamentals that I had predicted, and it came to fruition, and it worked out. And each trade makes 500 pips. But I have to be in it for 5 weeks. That happens. It does happen. So I won't make 10,000 pips. I'll make 5,000 pips. You know, it won't be all in one day, or it'll take me a month and a half. But that is like absolutely. You imagine if you did this on, dude. Like, again, you don't have to be a rocket surgeon for this stuff, right? You're like, well, I don't have a Harvard degree or something. Dude, Brexit. Okay, Brexit, very bad for the economy. Great. So for the last, so if we did this daily or something, and did this daily, and did this daily. Okay, did this daily, did this daily. What is the potential that you said, Brexit bad, sell pound? We'll just take this one as an example. Isn't this what I've been telling you to do? Over and 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 over again. So every single day you wake up and you sell the pound. And you wake up and you sell the pound. And these are swing trades, but whatever. Okay? How many bearish moves? Okay? Top, clearly. Breakout, clearly. Roll reversal, clearly. Down here, roll reversal, clearly. Moving averages. Look at all these, right? And this is on a daily, so you imagine on a 4-hour and a 1H. And every single day you're swing trading, so you're doing monthlies, you're doing weeklies, you're doing dailies, you're using moving averages, you're using price action, you're doing all the things you need to be doing, but the only thing is you're only short. Or it's not this one, it's pound Swissy. This is why I bought a new monitor. See, I can't see any of this. So this is all pound weird stuff. Let's do so what if you also did pound Swissy? Okay. And what if you also did, dang it, there he is, pound yen. And all you did is you wake up in the morning, day after day, using your swing trade pivots, your day trading pivots, your moving averages, and all you did, dude, seriously, boom, 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 boom. Look at it, every day, sell, 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 sell. I know. I mean, just you had all those trades: pound yen, pound dollar, pound Swissy, and then of course there's more than that. But you're entering trades and you're letting them run. You're not scalping 25 pips so you can have money. That's being rich. If you do it almost 100% of the time and you're willing to work hard every single day, day after day after day, that's one way. Or you wake up in the morning, you sell the pound. You wake up the next morning, sell the pound. You wake up the next morning, sell the pound. And you're letting them run. I'm not the one that invented this. Let the winners run. That's all I'm saying. Do your analysis. Come up with a bias. Confirm or deny that your timing is correct using technical analysis. But let the winners run. Let the money make you more money. Let the money do the work. That's all I'm telling you to do. I'm trying to open your mind. What you used to do wasn't the right thing. These things are the better things that you're trying to learn. I'm trying to open your eyes, and you have to have this aha moment where you're like, oh my gosh, that now I know, right? And then you learn the skills to do it. But you have to think big. You have to think about what statistics matter. And you got to think about, do I really want 25 pips profit on this, or is it worth 300? And is this a trend? Did I sell in a falling market? Am I buying in a rising market? It's amazing that people don't even ask those questions. They're just like, what are you doing today? Oh, I don't know. I sold the pound. Really? What'd you do yesterday? Oh, I bought the pound. Really? So I want you to get consistent. I want you to get focused. I want you to do the right work. Give yourself opportunities, manage the risk, remove the risk, and then get paid what you're worth. And your time is valuable. I don't want you to be picking up pennies in front of a steamroller. I want you to ride these trends out. Go all the way. And then when you cash out of your 10 trades or your 20 trades or your 40 trades, I've cashed out of 100, 150 trades that I had open, and it's a horrible feeling. It's a horrible feeling. It's a horrible feeling. And I want you to go through that where you make 10,000 pips in a month. Or let's say, I shouldn't say that. You cash out of 10,000 pips and you go, ciao. And all your trades are gone and all the pips are now in your account and it's empty. and your floating profit and loss just says 0. And it's a devastating feeling. You just made 10,000 pips and now you're like, I don't know what I'm going to do next. Do I have to do all that work over again? That's different than punching into the factory, working for 5 hours to get paid, and then clicking out. That's what like scalping is. You need to have those skills, but if you really got mad skills, you enter good trades that are not worth 25 pips, they're worth 300. Turn your 25 into 250. You're worth 10 times more money than what you're paying yourself because you're taking that initial risk, right? You're doing all the work. Like I said, you have this hypothesis, you're doing your fundamental bias, you're looking at long-term trends. You're like, okay, well, it's going to kick off this 4-hour 21. I'm going to go here. So now I got to wait for it to go up. And then it goes up in there. And now I got it in the price. So now you got to go a smaller time frame. You're doing all that. And after like 3-4 hours of work, then you take the trade and you drop a stop. And that's when you start praying. But you've done all the work. You've done all the analysis. For crying out loud, don't make 25 pips. You're worth 10 times that amount. You've already done the work. I'm just trying to tell you, believe in yourself a little bit more and get paid. You get paid. Because tomorrow you shouldn't be starting over again. You should be adding. And the next day you should not be starting over yet again. You should be adding. And the 5 days from now, 8 days from now, you're not starting, you're logging into your account and there's no trades. You're like, I wonder what we're going to do today. Oh my God, look at the pound, it's taking off. Like, please hear me. That is not the way you do it. Oh my God, look at the pound. Now I know what to do today. That is not how you trade. Well, it might be the way you trade. It's not the way you're supposed to trade. You will not get filthy, stinking rich doing that. You'll get filthy, stinking poor. And there's no dignity in poverty anymore. Poverty sucks. When I grew up as a kid, we didn't have a running water in my kitchen. It sucks. So you got to get paid. But do the work. If you didn't do the work, your trading sucks anyways. You're not worth anything. If you're not doing your trade plans, you're not worth anything. You don't have a skill. You don't have a product or a service. You don't have a business. You just got nothing. You do analysis and you put together a trade plan and you can put that into the market. Now you got a skill. Now you got a business. Now you have a career and you're worth something. I want you to focus on that. If you're not planning, I'm like the swing trading group. Let me say one more thing about that. Swing trading group. Everybody that joins that will probably, tomorrow is the first day, but we'll end up probably doing it Thursdays. I'm probably going to move it Thursday at 10 or whatever. I want you to plan Monday's trades on Thursday. And if you get that skill down, you're not going to get it in the first week or the first month or the second month or the third month maybe. This will take time. It's a real skill. You're going to Harvard and getting a skill. Okay? Once you get that down where you're planning Monday's trades 2, 3, 4 days in advance, you got it. You're going to make it. You have a career based on a skill. You have a product or a service. You have a business. You're in the game. You got it. Now it's just time. Time and assets under management. If you're young, you got tons of time. Grow your trading account. If you're older and you don't have much money, you need to increase your assets under management. But you have a skill, which will lead to either a career, which is like work for someone else, or you have a business where you work for yourself. But if you can't plan next week's trades right now, you don't have a skill. You don't have a skill, you don't have a job, or you can never start a business. You don't know what's going on. That's it. So I hope, you join this sort of revolution. I want you to revolutionize your life. I want you to stop trading like the way you used to trade, your old you. And I want you to start trading the way you want to be. I want you to be the trader you want to be. The one you dream of, let's do that now. Okay? Yeah, that'll be next. That'll be next. That's on my to-do list. Okay? Oh, you got to take profit. You have to know when to take profit. Okay? So anyways. So I babbled on way too long today. I apologize. It just clicked over 2 hours. I apologize for that, guys. Anyways, peace on earth. May the pips be with you. May your profits be above average. If you're joining the swing trading group, our first is tomorrow. HTTP swing. I'm typing it here. swing.fxbootcamp.com. We start tomorrow. Okay. So, anyways, peace on earth. May the pips be with you. May your profits be above average. And there's tons of stuff on YouTube, totally free, man. I've been doing this. I've been uploading to YouTube since 2006. There's more than 4,000, probably close to 5,000 videos that I've associated with my work on YouTube. Watch them all. If you want, they're there. That's why I did them. Take care of yourself, and I'll see you guys tomorrow. Cheers.